8 separate tax reduction forms are sitting right now in your county assessor's office. And before I say anything else, I need to address the number one reason people who actually qualify never file a single one of them. They think this video is only for a certain type of homeowner. Some assume it's only for people struggling financially. Others think it's only for wealthy people. And a third group stops listening the moment they hear exemption because they're under 65, they're living with a disability, and figure this doesn't apply yet. All three of you are wrong. Some of you own a paid-off house and think the tax bill doesn't really impact you anymore. It does. It's the single biggest recurring bill you'll ever owe on property you already own outright. Some of you rent and think this has nothing to do with you. It does. Your landlord passes that property tax straight to you in your rent. When the tax bill drops for the owner, your rent stops climbing the way it has been. This is for every single person watching. Whether your home is valued at $85,000 in a rural area, $260,000 in a mid-sized city, or $520,000 in a recently reassessed county, there is real money on this list. The honest truth is homeowners at every income level, every age, and every ability are quietly overpaying, just in different ways. Why nobody tells you about these forms. Here's the brutally simple truth. Your county tax assessor's office gets paid from the tax revenue they collect. Every dollar of exemption they approve is a dollar. Their budget doesn't see next year. The county has zero incentive to tell you about a form that lowers what you owe them. They don't call. They don't mail you applications on your 65th birthday. Your mortgage company never flags it. Your real estate agent absolutely never brought it up. Here's the number that makes this real. The average property tax bill runs around $4,800 to $5,000 a year nationally, but in some counties in New Jersey and Illinois, it's over $8,000 for a homeowner who's 65 today and lives another 20 years in that house. That's between $96,000 and $160,000 walking out the door on a bill that for many of you should be cut in half or brought to zero entirely. So here's the plan. I'm going to walk you through 8 forms, one at a time. Then I'm giving you something I've never seen in another video like this, a real month-by-month calendar of exactly when to file each one and what to do the moment the county denies your application, because a denial is not the end. Here's the single idea that ties everything together. Being legally exempt from a tax bill and actually not paying that bill are two completely different things. The law doesn't refund you automatically. You have to know the form exists and you have to file it. Form number 1, the Homestead Exemption. This is the form most homeowners are completely sure they already have on file, and a huge percentage don't. Nearly every state offers some version on your primary residence. What it does is remove a chunk of your home's assessed value before the county calculates your tax bill. In Florida, that's $50,000. In Ohio, roughly $26,000. In Texas, the Homestead Exemption just changed. For years, it was $100,000. As of 2026, it jumped to $140,000. If the last number you heard was $100,000, you're leaving $40,000 of exempted value on the table. Here's the problem. In most states, this is not applied automatically when you buy the house. You have to file a one-page form with your county appraisal office, and there's almost always a spring deadline, commonly April 30th. Miss it, and you pay the full bill that year with no exceptions. File it once correctly, and in many states, it stays attached to your property for as long as you own it. One piece of paper filed one time can mean hundreds, sometimes thousands of dollars off your bill every single year for the rest of your life in that home. Your action? Call your county appraisal office tomorrow and ask, "Is the homestead exemption currently on file for my property?" If the answer is no, ask which form adds it and when the deadline is. Form number 2, the senior or age 65 exemption. Most states that offer a homestead also offer a separate senior exemption that activates when you turn 65. The county will almost never send you this application unprompted. You have to ask for it by name. In Texas, this just changed too. For years, homeowners 65 or older got an additional $10,000 off the school tax. As of 2026, that jumped to $60,000, a six-fold increase. Stack the new $140,000 homestead with the new $60,000 senior exemption, and a Texas homeowner 65 or older can now shield $200,000 of assessed value from school property tax, up from $110,000 just 1 year ago. If you already have the homestead on file, the higher amount applies automatically. In Florida, the senior exemption adds another $50,000, effectively doubling it. In New York, qualifying seniors can eliminate up to half their assessed value. South Carolina offers even more. Homeowners 65 and older can exempt the first $50,000 of fair market value from all property taxes. Here's where comfortable retirees often stop reading. Some states attach an income limit, but more than half the states offering senior exemptions have no income test whatsoever. Texas, Florida, Georgia, Tennessee, Mississippi, Alabama, South Carolina, age-based, full stop. You turn 65, you file the form, you qualify. Your action: call your county and ask, "What is the senior exemption application called here? What do I need to qualify? And when is it due?" Form number 3, the senior assessment freeze. Without exaggeration, this is the single most valuable form on this entire list. Here's what it does. The year you turn 65 and file the freeze application, your home's assessed value locks in at whatever it was that year. From that moment forward, no matter how much your neighborhood appreciates or how high your home's value climbs, your property tax bill stays calculated against that frozen number. In Texas, once you file, your school district tax is frozen at the actual dollar amount of that year's bill. Your home can triple in value. The tax bill cannot go up. Here's where this gets painful for the comfortable, paid-off homeowner. The freeze is most valuable precisely in neighborhoods where that group lives. Picture this. Your home was $240,000 when you turned 65. It's $480,000 today. Without the freeze, you're taxed on the full $480,000 every year. Your neighbor across the street, same house, filed one form and is still taxed as if their home was $240,000. At typical rates, that gap alone can run $2,500 to $4,000 a year. One form. That's the entire difference. Critical rule. In most states, you must file within a specific window, typically January 1st through April 30th, the year you turn 65. Miss it, and in many states, you lose the freeze permanently. Good news. If you're already past 65 and just realized you never filed, in many states you can apply right now. The freeze applies going forward. But every year you wait is another year of overpayment. Your action? Call the county today and ask for the senior tax ceiling or assessment freeze application by name. Form number 4, the circuit breaker. Almost nobody outside a tax office knows this name. It's aimed at homeowners on modest or fixed income. When your property tax bill crosses a certain percentage of household income, typically 3 to 6% depending on the state refunds you the difference. Here's why almost nobody knows about it. It's a state form attached to your state income tax return, not a county form. Even in years you owe no state tax, you file it. If the math crosses the threshold, The state cuts you a check or applies a credit. Massachusetts, Maine, Vermont, New York, Michigan, Minnesota, Missouri, Maryland, Wisconsin, and Illinois all run versions of this with payouts from a couple hundred up to over $1,300 a year. Pennsylvania's property tax rent rebate pays qualifying seniors up to roughly $1,000 a year, and it covers renters too. Connecticut runs a similar credit for homeowners 65 and older. This is not a poverty program. This is a working and retired middle-income program that the overwhelming majority of people who qualify for it have simply never heard the name of. Your action: if your state is on that list, search Circuit Breaker Property Tax Credit, plus your state name and file that one-page form. Form number 5, the Property Tax Deferral. Almost nobody talks about this one because every state and county that offers it treats it like a closely guarded secret. If you're over 62 or 65 and you've lived in the home long enough, you can file to stop paying property tax altogether, not lower it, stop it. The state pays the bill on your behalf, and the deferred amount becomes a lien against your home, repaid only when you sell, refinance, or pass it to your heirs. For a homeowner who is house rich and cash poor, this single form can be life-changing. You get to stay in your home for the rest of your life without ever writing the county another check. Oregon, California, Washington, Colorado, Texas, Tennessee, Idaho, Illinois, and Massachusetts all run versions of this. The interest the state charges is typically low, frequently 2 to 6% simple interest. If you still have a mortgage, check with your lender first. For a paid-off home, the deferral is clean and simple. Your action: check if your state runs a deferral program and what the current interest rate is. Form number 6, the disability exemption. I added this specifically because every other video on this topic gets this wrong. Almost all assume disability relief only exists in the veteran exemption. It doesn't. If you're under 65, own your home, and hold a formal disability determination through Social Security, SSI, the VA, or a qualifying retirement system, a huge number of states give you the exact same exemption they give someone twice your age. In Kentucky, that exemption sits at $49,100. In Texas, that new $60,000 additional exemption isn't labeled senior. It's labeled age 65 or older or disabled. One form, 2 paths to qualify. You do not have to be 65 to get it. The application is usually the same one-page form your county uses for senior exemptions, with a box you check for disability instead of age, plus a copy of your disability award letter. There's no birthday deadline window here. You can file the moment your disability determination is in hand. Your action: call your county and ask, does this county offer a disability exemption separate from the age 65 exemption? Form number 7, the disabled veteran exemption. This exists in nearly every state, and depending on your VA service-connected disability rating, it can eliminate your property tax bill completely. A 100% service-connected rating in Texas, Florida, Virginia, or Pennsylvania means 0 property tax for life. Even a partial rating stacks on top of everything else, including the Homestead and the freeze. It's typically a one-page form plus a copy of your VA disability letter. In several states, surviving spouses of veterans killed in action or who held a 100% rating can carry the full exemption forward. Your action: if you served or a spouse or parent served, find out this week if that exemption applies to you. Form number 8, the surviving spouse. Carryover. When a senior homeowner passes away, their senior exemption, assessment freeze, disability exemption, and disabled veteran exemption do not automatically transfer to the surviving spouse. They have to be reapplied for usually within 1 year. If that window is missed, the property tax bill can jump thousands of dollars in a single year, landing on the exact household that just lost half its income. The county will not call to warn you. They'll simply recalculate the bill at full value and mail it. Your action. If you've recently lost a spouse, this is the very first call you make. The appraisal protest. Every single year. Every property tax bill is built on the county's appraised value of your home. That value is set by an assessor who, in the vast majority of cases, has never stepped foot inside your house. They work off neighborhood averages and broad assumptions, and they get it wrong constantly, sometimes by tens of thousands of dollars. Every county runs a formal right to protest process, almost always within 30 to 60 days after your appraisal notice arrives. You file a short written protest, bring 3 comparable home sales from your neighborhood that closed for less than your appraised value, and sit in front of a review board for about 15 minutes. Close to half of all protests that actually get filed result in a real reduction. Yet in most counties, fewer than 5% of homeowners ever file one. It costs nothing. It requires no attorney. Do it every single year, and especially without fail the year you turn 65 or the year your disability determination comes through, because that's when your other exemptions kick in and a lower starting value compounds every benefit on top of it. Your month-by-month filing calendar. January through March. This is when most counties mail your annual appraisal notice. The day it lands, write your protest deadline directly on your calendar. It's almost always 30 to 60 days from that postmark. The month around your 65th birthday, this is your window to file the senior exemption and assessment freeze in the same visit. The freeze carries a strict one-time filing window. If your disability determination comes through, that filing window is open immediately any time of year, spring before April 30th. Most homestead exemption deadlines land here. When you file your state income tax return, that's when the circuit breaker credit rides along, even in years you owe no state tax. The moment a spouse passes, file the surviving spouse carryover application immediately, ideally within that first year. Print this calendar and put it somewhere you'll see it every day. The single biggest reason people miss these forms is that 6 months later, the date has slipped their mind. What to do? When the county says no, you file everything correctly and the county denies it. First thing to understand, a denial is not a final verdict, it's an opening position. Counties deny first-time applications at a surprisingly high rate, and the overwhelming majority of the time it's not because you don't qualify. Every single program on this list has a formal appeal path, usually around 30 days, to request a second review or formal hearing. When you appeal, ask in writing for the denial to state the specific reason. That one piece of paper tells you precisely what to fix. The overwhelming majority of denials trace back to one of 3 things: a missing proof of age or disability document, missing proof of residency, or a deadline the county is interpreting differently. All 3 are fixable in a single follow-up visit with the right paperwork. If the second review still denies you, most states allow escalation to a county appraisal review board or a state-level tax tribunal. You don't need an attorney. The system is built so that most people give up the moment they hear no. The ones who come back with the right paperwork are overwhelmingly the ones who win. Your complete action list. 8 forms. The homestead exemption, the senior exemption, the assessment freeze, the circuit breaker, the deferral, the disability exemption, the disabled veteran exemption, the surviving spouse carryover, plus your standing right to protest your appraisal every single year. None of it happens automatically. Your county will never call. Your mortgage company will never flag it. Your accountant will rarely bring it up unprompted. Every single one of these forms sits in a drawer at your county office, waiting until the day you walk in and ask for it by its exact name. The homeowners who claim these exemptions are not luckier than the ones who don't, and they are not wealthier. They are simply the ones who found out the forms existed and who didn't stop the moment somebody told them no. If you know one homeowner over 65 or one person living with a disability who's still writing the county a full check every single year, send them this video today. It might be the difference between them paying that exact bill for another 20 years or never having to write that check again.